Today, we're going to decode the hidden mechanics of the financial system to help you stop renting your time and start building some lasting wealth. Listen, if you've ever felt like you're just endlessly running on a financial treadmill, working harder and harder but not actually getting any further ahead, well, you are absolutely not alone. So let's take this whole system apart and see exactly how it ticks.
All right, let's dive right into this. Imagine you just signed for a standard personal loan of $5,368. You sign the paperwork, you pull up your banking app, and boom, the balance is right there on your screen, ready to go.
But I want you to just pause for a second. Where did that money actually come from? Most of us just kind of assume this money is, pulled from a giant physical bank vault somewhere. Or maybe it's borrowed from another saver's deposits. We picture this massive pool of cash that the bank just scoops out of. But is that what actually happened?
Well, here's our first major shift, and it's a bit of a mind-bender. That money was literally typed into existence. Seriously, the bank manufactured it on a digital ledger the exact second you agreed to pay interest on it. It wasn't pulled off a dusty shelf. In our modern banking system, loans actually create deposits. The money only exists because you promised to pay it back, with interest, of course.
Section 1. The Matrix of Money. So let's completely redefine what we're actually dealing with here. Money isn't just physical cash anymore. It's simply a system of ledgers. It's organized trust that only holds value because we all collectively agree it does. When you get paid, you aren't really receiving wealth itself. You're receiving a claim on wealth. It's basically a token that says you can ask other people for their time, their skills, or their resources tomorrow.
Now, take a look at this quote, because it's wild. The modern banking system actually requires perpetual debt just to function. Because every single dollar created comes with interest attached, the system constantly needs more growth, more loans, and more debt just to pay off the old interest. It is entirely designed to normalize you owing them. It's not a bug, it is literally a feature of the system.
Section 2. The Debt Trap. Okay, knowing the mechanics is really only half the battle. The other half, understanding our own brains. The system leans heavily on 3 human patterns. First up, present bias. We just naturally want instant gratification and value today way more than next year. Second is loss aversion. This is the one that makes it physically hurt to look at a dropping bank balance, so we just avoid opening the statement altogether, like there's a monster hiding under the bed. And third, status signaling. The system offers you a flashy lifestyle right now so you can signal to everyone else that you're doing great, driving consumption way before you can actually afford it.
So the really crucial point here is that consumer debt is essentially time travel for consumption. It lets you pull future income right into the present. You get that shiny new car or that fancy vacation today, but your future self, well, they're chained to the monthly payments. You're literally trading your future flexibility just for present comfort.
Section 3. The Tale of Two Paths. Notice the stark difference between these two approaches. On the left, we've got poor Peter. He borrows at 7% to buy a flashy $50,000 truck and inflates his lifestyle with every single raise he gets. He looks incredibly successful, but honestly, he feels broke. Meanwhile, on the right, Rich Richard lives way below his means on the exact same income. He has built up an immunity to lifestyle inflation, and he only uses debt to buy assets that actually generate income. He doesn't care at all about signaling wealth, he just cares about building it.
Just look at the math of compounding over 40 years on this chart. It's absolutely crazy. While Peter has a meager $60,000 saved after decades of side hustles and constant stress, Richard's disciplined $10,000 investment, growing at just 10%, has absolutely exploded to over $450,000. The system always rewards whoever can wait.
Section 4. The Mindset Shift.
Think about it like this. If money is just a ledger, then banks are really just selling you access to time, and they are charging you a hefty rent for it via interest. They let you buy today using tomorrow's deposits, which means the ultimate winning move is to just stop feeding that interest machine. You have to transition from being a renter of time to an owner of time.
Section 5. The Quiet Wealth Playbook. All right, so how do we actually do this? Well, you can start winning tonight by following these 3 tactical moves. First, mapping your ledgers by dates, not just amounts. Second, picking one specific day to pay your major bills. And third, deliberately creating what we call a micro reserve. Let's break these down.
Look at how this three-ledger map organizes your finances purely around timing. You've got your life column for real-world bills, your bank column for when your paycheck actually clears, and your debt column for when interest hits. This map proves that a lot of the time, you aren't actually broke, you're just mistimed. There's a mismatch between when bills hit and when paychecks clear. Dates are the real levers you need to control.
To put that into perspective, consider a guy named Harry. He worked at a mall kiosk and constantly felt like he was drowning. Now, he didn't win the lottery or anything. He built his micro-reserve by moving just $11 into a completely separate pocket in his banking app every single time he made a card payment. I know, it seems incredibly small, right? But that tiny, repetitive action started building a massive wall.
Because he had this small, growing buffer, when his car battery suddenly died, he didn't instantly swipe a credit card out of pure panic. No. He used a 48-hour pause, consulted his ledger map, and realized his major bills were already protected. So he just paid for the battery in cash right from his reserve. Bam! He stopped the interest machine dead in its tracks. That little pause didn't just save him money, it completely broke his habit of borrowing for surprises.
Section 6. Owning your future time.
This is where you stop chasing that loud, visible, debt-funded wealth. Seriously, that stuff is just exhausting. Instead, you start building quiet wealth. This is the kind of wealth where you gladly pay $150 for a cleaner just to buy back 3 solid hours of your time on a Saturday. It's about having actual white space on your calendar. It's the ultimate ability to say no to things that don't serve you without panicking about the cost.
As we wrap up this explainer, I want to leave you with a really profound question to reflect on regarding your own habits. Take a hard look at your ledger, look at your calendar, and ask yourself this: are you just endlessly chasing money? Or are you secretly getting rich in time? Thanks so much for joining me on this deep dive. Go start building that buffer today and take your time back.